Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 20th. Michael Boutros here with you this morning. Horace, Karthik, Pete, Raphael, Ziad, good to see everyone here in the room. D, always a pleasure. Alan, DJ, Graham, good to see you guys here today. Good morning, Horace. So, for today, we're going to start off with a review of the setups that we've been following, obviously, on the intraday charts. Some interesting price action in the dollar, which continues to gather pace into resistance. You can see the index right here. We'll cover the DXY, dollar yen, Aussie yen, euro kiwi, and dollar CAD from last night's update. We'll take a look at the euro, pound yen, euro yen, and the Aussie from the previous updates. And that's what's on the menu for me today. If there are any other pairs or setups that you guys want to review, as always, feel free to throw them on the message board. We'll leave as much room as we can for questions at the end. Okay. Good morning, all. Have a fabulous day, says Karthik. Cheers, mate. Good to see you in the room, as always. So, heading into the U.S. trade session, here's what we highlighted yesterday. And for the dollar index, the focus right now is on this key resistance region. We're testing it as we speak, 97.57 into 97.78. 97.78 is just that last swing high that we made last month. But basically what I'm looking for is if we do breach this, it would suggest a near-term change in behavior. Okay, you had some divergence into the lows at trigger break, which has manifested itself, but not so much in price action. So a break above that high would certainly suggest near-term you have some further upside slope here in the dollar index. From an intraday standpoint, here's the slope that we've been working with. And certainly a topside break, the 50 line, which caught the highs last week, is exactly at 97.78. So again, that's sort of the breakout zone for me. Initial target would be 98.28. The 2016 open would be the subsequent target, but initially this is the focus as we head into the U.S. trade session. Now again, we're light on data this week, so there's not really much to keep in mind. We're light on data this week, so there's not much headline risk except for the Fed speakers. And I put a calendar here for you just to keep in mind all the Fed speakers that are on tap. Today we have Fisher, Rosengren, and Kaplan all making comments. They're likely to be more neutral, while at the same time giving a little more clarity to the offload of the balance sheet. And that's really what the focus is for the Fed moving forward. Interest rate expectations, they're about 50-50 for December. So, we haven't really seen a shift there, slight decrease post-FOMC, but the commentary is going to be what's going to move the dollar here, if anything, as far as headline risk is concerned. So keep these speeches in view. Just know when they're talking. The propensity to move some of the dollar crosses definitely is there as we get deeper into the week. Okay, so for the index, again, here's what the 120-minute looked like last night. Here's what it looks like right now. So we're kind of trying to creep above that key resistance region, right? And the top side would be, like I said, 97.78. That would be sort of the breakout level that you would look for on an extended dollar play. I'm just putting this out here for reference. I don't have any plays that I've been moving on the dollar index per se. Euro dollar is coming and holding at a major support at 111.40. I know Jamie has the entry for the long at 111.60. So really, really critical area. Last-ditch effort for a hold on the euro. And if that does hold, again, with the index being where it is, you might see some downside from here. So my focus is really on the euro right now, but just to keep things in perspective, if you do see a daily close today above 97.78, that would suggest we do have some further upside potential here in the dollar index. All right, any questions on the dollar index before we move on? I don't want to spend too much time on this. Just focus on that major resistance into the close today. That's what I'm going to be looking for as far as a tell in the dollar crosses. That's number one. Number two, dollar yen. Here's what dollar yen looked like yesterday. I gave an update on this also on Daily FX. I just wanted to highlight, and as I said last night, I'd be mindful of really trying to chase the long side at these levels. I still like the long side, but from here, you kind of want to be a little cautious. Okay? A slope line of the same gradient for the formation that we've been following kind of hugged that 50% retracement. And while we did probe just above it in overnight trade, you could see a really nice hold in dollar yen right around that level. And here's the turnaround. So yeah, I'm looking a little bit for a pullback here to get back in on the long side. Initial levels of interest, I do want to see if 111.20 does anything, that initial spike high for the opening range of the week. But really, you want to stay constructive above 110.75. 110.75, by the way, is the monthly open, and just below it, 110.60 is the 200-day moving average. So you get a real nice pocket of support, former trendline resistance, and that's going to be our near-term bullish invalidation level. As long as price stays above 110.60, 110.75, I'm looking higher in dollar yen. Keep in mind a couple of things and why a pullback from here wouldn't be outside the realm of possibility. Obviously, you're testing the objective monthly opening range high. Here's your monthly open. Here's your monthly opening range high. Just an objective test and pull back. Here and then rally higher, sure. But the broader focus stays constructive above 110.60, 110.75. Questions on dollar yen. The top side level that you really want to be mindful of would be 112.20 into 112.25. Okay, you have those peak highs that you made back here towards the last week of March, and you have the 618 retracement of the decline from the highs of the year. Okay, nice little pivot in price right there. Those coincide on the upper parallel a little bit later in the week here, heading into Asia, into tomorrow on the top side. Your sound is distorted, D saying. Guys, are any of you also seeing that problem? Horace says yes. Okay, sorry about that. Let me see what I can do. Okay, sorry about that, guys. See if that helps. Keep me updated if there's still an issue. What was I saying on dollar yen? The only other thing I wanted to say on dollar yen, guys, is this slope line. We talked about this briefly earlier in the week, but I just wanted to note, every time we've seen price action test this slope, it's been a very low tolerance gradient, meaning as markets come into this region, we don't spend too much time dilly-dallying around it. So you can see a really strong resistance. The break actually gapped and fueled another higher, same type of deal. You gapped and moved strongly to the downside, resistance. So on this, we want to see acceleration to the upside. We want to see a pullback hold into support at that region. And that'll be the tell here for dollar yen. Questions on dollar yen. Finally getting some clarity, actually looking pretty clean here. Bungani saying sound is still breaking. I apologize for that, guys. I will try to get this resolved. I'm not sure why we're seeing this issue. Everything looks good on my end. So just bear with me today, and we'll see if we can't get this resolved. Okay. Yeah, Horace, thanks for that. And Pete, okay. Yeah, I have everything shut down on my end, so hopefully you'll see some sort of difference here. Okay, moving along. I'm going to try to press through here. The other one that I was really excited about yesterday, well, I was really excited about Euro Key. I just missed entry right before the webinar here, and it's already ripped like 60 pips to the upside, so I'm really frustrated about that as we speak. We'll go over that in a moment. But Aussie yen, I mean, listen, it's coming into a huge region. It did the throw over in overnight trade right here just before the open in European trade actually, and it's just a huge area of resistance. So here's what Aussie dollar looks like on the daily chart. Okay, you guys know I love these confluences. This is a 100% extension from the advance off the lows. This is a 50% retracement of the 2017 trading range, and you have the median line of the current operative slope to the upside. All of it converged right around 84, 83, 84, 84, big region of resistance. I was looking for short triggers all night. I didn't get any. I came in this morning. It was probing through that resistance again. Quick reversal took us right back below, and I think things are starting to pan out here. Now again, we're just playing a pullback. This is obviously a breakout. I do like the pair higher broadly speaking, but near term, you're running into resistance, and resistance is resistance, right? So here's what the intraday chart looks like. There's that trigger we were looking at last night. Okay, let me bring up that chart. Aussie yen, what a beauty. And here it is, okay? So you had that trigger. You got into overbought territory, again, in overnight trade or in your early European trade as you probed right through that. Outside candle reversal off the highs, taking it back below 84.80, and that was kind of your entry with a stop against the highs there. Would have been a nice 30 pip stop. The ATR is nice and wide here. Key support still 84.25 into 84.40. It's a bigger range, but I'd be taking some off the table in that region. A break of Friday's low is really what I need to see. If you see a break of Friday's low, I think you have a drop all the way down to 83.74. What's 83.74? Well, it's kind of an objective region right here. A nice pivot in price. If you go all the way back to this low, okay, that's just the low that we made back in December 28th. Nice pivot in price, and it converges on this purple line. That purple line you can see more clearly on the daily chart. Let me bring you back. Okay, so you guys are familiar with this chart, I'm sure. Here's the pitchfork that we were working with. I've removed the one line because it hasn't offered much guidance, but you can see that slope, resistance, parallel, support, 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 and that's what that purple line is. You saw a pivot on both sides. A break, it became resistance. A break, it fueled a rally. That converges right down here at 83.70, which is the same as those December lows. So really nice levels, very clean. Obviously the daily chart is a little jacked up here, guys. I know there's a lot of lines on this chart, but I wanted to leave just the reference here so you can see, although the upper parallel was really late in calling the breakout, you can see the median line was really clear. Support, resistance, support. Okay, and we're at resistance right now. So looking for the near-term pullback, again, first initial targets would be right here at the monthly open into 84.40 or so. Look for that break below 84.24, again, to fuel a leg lower here. Also, one thing I do want to take into note, and I didn't add it because obviously we didn't have a concrete high in place, but if you look at this objectively, guys, take a quick retracement just off the lows. At 38.2 comes right above that region, 83.74 into 83.80. Okay, and even the 236, if you add that on, gives you some guidance right into the lows of the opening range for the week. So the levels are just like super clear. Okay, I don't want to leave this retracement on right now just for the sake of not cluttering up the chart, but you get the picture. If we do move sub 84.24, 84.30, look for this thing to gather some pace. Any questions? If we see a reversal in the unlikely event that this thing kind of just breaks through the highs, right? There's really nothing on tap until 85.60, 85.80. So there's a lot of room if we mount this key resistance range on a daily basis. Any questions here on Aussie yen? Really like it. We kind of fell out of love with this a couple of months ago after we came into some key support. But if you recall, as this thing was heading into the highs, the last update on Aussie yen, we were looking lower. Obviously, broke through support, 200-day moving average, popped right back through it. Focus is still weighted to the upside, broadly speaking. Questions on Aussie yen? Going once, going twice. Sold. We're making good time today. Euro key. Oh, Euro key. So here's what Euro Kiwi looks like. huge support barrier. I kind of just randomly fell on this one yesterday. Got myself all excited and missed the entry yet again. Happens. Here's what Euro Kiwi looks like on the daily chart. Very simple setup. Nothing too fancy. A basic median line structure off the lows of last year and this year puts the lower parallel right there. You had the 100-day moving average, which is converging right on that lower parallel. Then you have a basic 50% retracement of the entire 2017 range, also right there, and a decent pivot in price even. Okay, look at those highs that we made in May of 2015. Nice pivot, break, saw acceleration. It's exactly where price is trading right now. So if we're going to mount any type of near-term recovery here for Euro Key, this would be the area to look. Momentum flattening out right ahead of that 30 level. This would be the area to look for some near-term recovery. Add to that Kiwi, take a quick segue, looks pretty vulnerable for a pullback from here. I mean, it could stab one more time to make some sort of consolidation before a break, but largely speaking, this has the hallmarks of near-term exhaustion. So if we do get the pullback in Kiwi, I think that could fuel a nice little rally near-term in Euro Key. And as we noted, or as we will note, moving forward, euro dollar seems to be at support. So the idea or notion for a near-term reprieve in some of the euro weakness, I think Euro Kiwi is a good candidate for that. So watch this huge key zone at 53.40 into the 54 handle, essentially bigger range, but again, a pair that has a decent range ATR or average true range. So certainly I'm looking for a little bit of a recovery off this level. The beauty of the setup is that the near-term structure is just a basic channel, descending channel. And here's what it looks like. Oops. Okay. Again, you had a really good trigger just ahead of the webinar here on building divergence. Price action made a lower low. The oscillator made a higher low. Very subtle, but close to 50. Those are pretty strong signals. And basically, the idea is once we clear this channel on the pullback, you want to try to enter the long position looking for a stretch into this slope, which currently takes you, what was the first target? Soft target at 55.60s, which is right around where this is, right here. And then you have the ML, which is 56.27. That's this key region right here. Very nice pivot in price. And the former swing low from back here in May. So that's sort of where I'm looking at as far as the Euro Key play. If you're already long, or if you caught that trigger off of this key support earlier, keep in mind the ATR, opening range highs for the week. I'd be looking to shave some off. I wouldn't be banking on the break of this channel resistance just yet. Might be worth leaving some on with a stop at break even. If you're not already in the play from here, I wouldn't go chasing. You're already good 60, 70 pips off the low. So what I'm looking for is either a breakout of this channel and a test of support, or if you get another low into US trade into that key pocket right there. By the way, if I snap the chart, let me just bring all the levels in. If you get another drop into that key pocket right there, it might be a test of the lows, and again, a stop against that low would be another attempt for a near-term scalp to the upside. But critical support, also the weekly opening range low, and when the weekly opening range takes place above or below major support, those will tend to be the best intraday plays. All right, so another pair we'll be focused on as we look for the euro, which is coming into some support across multiple pairs to start off the week. Questions on Euro Key. Testing support as we speak. It's number 3. CAD yen for gram. Let me write that down. CAD yen. Sure, gotcha. All right, last but not least from last night, number 5, we'll take a quick look at dollar CAD. I was in a short on this one yesterday. I got stopped out at break even for the rest of the trade. I took half profit at a good 38 pips. It was actually a really nice decline here into the US Open. It quickly fizzled, and then the stop at break even, or just in the money, just ahead of break even, got stopped out on that overnight, or not the overnight, the spike into the close of US trade yesterday. Right ahead of the US close, I got stopped out on this spike. We meandered here, like I said last night, I'm willing to take some short scalps off of 32.83 if we get some triggers. I haven't taken anything here just yet. More importantly, if you get into 33.30, now you want to drop that to like 33.20 to account for slope. That's where the 200-day moving average is. Former slope resistance, really nice pivot, support, break saw acceleration, and now converges on the 200-day moving average and a parallel. So if you take that trendline support off the June lows, take a parallel from the October lows, support, pivot, support, all of that converges right here into 33.30. So if we get that, an area of which I'd start to look for some near-term exhaustion, this is obviously the first zone right here. So if we take a deeper look at the 15-minute or even the 5, yeah, it could be seeing some exhaustion up here too. So I want to see how this opens up the U.S. trade session. If you get another spike high and a failure in your 32.83, it might be worth a decent scalp. The ultimate level here that we're looking for, that we've been looking for, hold on, my computer's locking up there, has been this 3140 region, right? That's the 100% extension from the decline off the highs. It's a 764. If you take it on a daily chart, the 786. Either way, it highlights this key region of support. And that's sort of what I'm looking for on the downside. We just missed it last week. And that's the major support structure still for dollar CAD. So still think we can make another low here before everything turns around. But largely speaking, 32.83. 33.30, both areas of interest for possible exhaustion on this near-term recovery. Bangani says, I came in late. If you haven't looked at EuroCAD and Pound Yen, if you have looked at them, I will listen to the recording. I haven't, but you know what? We will. Pound Yen is already on the list. What was the other one? EuroCAD. I can add that. EuroCAD. No problem. Any questions on dollar CAD? Keep in mind you have oil inventories on tap tomorrow, and we'll look at that to shift or possibly offer some fuel here. But largely speaking, I'm a little bit more neutral, looking for exhaustion near 32.83, near 33.30. Okay, euro dollar from the previous update. Here's what euro looked like. Again, here's what dollar CAD looked like last night. Just real quick. No change to any of the levels. We've simply made a break of this median line to the upside, testing this target. Again, 33.30 is bearish invalidation and a level of interest. Previous update looked like this, euro dollar. So we opened up the week basically at near-term resistance. That was 12.05, a level we've been playing for a while. The median line was right there. You know, it held. Bottom line, and we're now testing near-term support. So let's start off with the daily chart. Here's what it looks like, and you guys again have seen this before. It was in the previous update from this 15th. Okay, here's what we look like on the daily back on the 15th. We highlighted that key support at 111.28, 111.29. We rebounded off that region. We're still within the confines of that formation that we're looking at off the highs on the near-term chart, held resistance, and here we are back at support. 111.28, 111.30, you choke it up a little bit more right now because of the near-term slope, but this is the near-term major key region of support for the euro. If you break below this, it would suggest, again, a change in behavior. We talked about the divergence we were making into that high, and certainly would be the onset of a little bit more of a significant near-term reversal for the euro. That would upset my Euro key trade most likely. So keep that in mind if you're looking at Euro key as well. But as far as Euro dollar is concerned, if the dollar makes a break of that resistance on the index, you know, that would be the play. All else standing still or everything else constant, here's what the intraday chart looks like. If you're going to get a bounce in the euro, this is where it would happen. Okay, this near-term slope that we've been following off the highs, like I said, I didn't really want to put too much emphasis on it because we haven't seen that many touches just yet. But you can see that the slope has actually been pretty decent. The lower parallel caught the exact low that we made back here last week. Upper parallel was, or the median line was a little messy. And here we are again. Okay, support, lower parallel for the broader structure, right? This parallel off the highs, caught the highs, break saw acceleration. That's right here, right now. And then you have the 50 line right here. If you slide that down just a little bit, you could see that. 1, 2, consolidation break, instant support, converges on that same region. So 111.40, 111.38 near term, sort of a really big region of support confluence. If that were to break, again, you know, sayonara. You look for a larger correction here in the euro. So at a real critical juncture to start off the week. Again, as a disclaimer, I haven't taken anything on the long side of the euro just yet. I don't think I have the guts to do it from here. I want to see how the U.S. Open looks like, but I'm actually looking to play the euro key a little bit more aggressively as well. I think Kiwi does need to be, or should pull back a little bit from this region. So some interesting euro crosses in play. I will go over euro yen next, and then I will take your euro CAD trade. Any questions here on euro dollar? Dollar index, euro dollar, both, you know, dollar index at resistance, euro dollar at support. Should be a clear tell as we open up the U.S. trade session. Horace says, I like the euro kiwi. Yeah, me too. Me too. So that was number 5. Euro dollar was number 6. So let me do euro yen real quick. Here's what euro yen looked like, and here's what we looked like earlier in the week. Whoops. Aha. Okay. So the basic premise of euro yen was that you were at resistance. You had the monthly open, you had basic trendline resistance off the highs. We noted that level right around 124.48 or thereabouts. Here's the daily chart. And here is the monthly open at 124.52. Okay, and then you had basic trendline resistance, nothing fancy, off the highs, converging on that region. So as we opened up the week, that was sort of the main level that we were looking for on euro yen, and obviously the yen weakness being sort of the play over the last couple of days. And we favor broadly the euro long side. This is sort of a breakout potential trade. So what do we do from here? Well, the pullback is now coming into the median line. I'm looking for some support around 124.13 into 124, which was the swing highs from here. If we hold there, okay, that's the opening range low for the week, literally. Here's the weekly open. The opening range low comes in at 124.01, okay, right there. So if that holds, I'll be looking for some near-term exhaustion on that for a possible long play. Also going to be my near-term bullish inval. So if we do break below that, I'm not going to go chasing it, but I'd be looking for a move into the 50 line at least before trying to get long on this pair. So remember, on whole, if I take this out, let me do this on the intraday. Here's the 120. On whole, basic trendline resistance off the high. 1, 2, 3. Break, check as support, then move higher, could be the play. If that is, you want to see support ahead of 124. Topside break, you're looking for that stretch into 125. All right. In fact, you know what I'll do at this point to account for slope? I'm going to bring this into a 764, and that'll bring down the target at 125, same thing. Questions on euro yen? Bangani, on which pair? You're saying what position would you take? So on this one, I'm looking for some support into this region. Euro dollar, as I said earlier, I'm not really doing euro dollar right now. I like the long side above this region. That's all I can say. I'm I'm just not really convinced with near-term price action. So you guys, we always want to drill down into the near-term chart, right, when you're looking for an intraday position. So for me, this is actually a very clean-cut range. You got 111.42, you got 111.64, you got a 20 pip range. Haven't seen anything in momentum to really shift my focus higher. So if I'm going to be scalping or near-term trading this, I need to cherry pick my entries. I need to make sure that I can get a stop against this low with a comfortable enough play. With a 20 pip range right now, right, it's pretty tight. So, you know, I want to see something. I want to see something in this to put me in. On the near term, we're always about something in momentum and price giving us the trigger to jump into a position. So like I said, this was a beautiful trigger here just on account of where momentum was. Outside candle reversal, that would have been a nice entry right against the low. Euro Kiwi, like I said earlier, had a beautiful, you know, this is sort of your textbook trigger to the upside. Break on the pullback, momentum holds 40, stop against the low. Like I said, this ripped already 70 pips. So you always want to make sure you're looking at something in momentum, something in price to put you into the position. So I don't have anything on Euro, but I'd have to say right now, Bangani, I'd be constructive above the lows. This pocket of support is pretty big. The only thing that would make me look for really shorts would be a move sub 111.29, as we noted. Bangani, does that make sense? You have a lot of other CAD Euro crosses, excuse me, that I like better. Like I said, Euro Kiwis is a beauty in my humble opinion. We'll be looking for some clarity on Euro Yen. Let's check out Euro CAD here for Horace. Was that for you, Horace? No, that was for Graham. Graham, here's Euro CAD, man. Since we're on the Euro crosses, let's take a look. Okay. All right, so you're seeing some building divergence into the lows. Remember, when you're looking for divergence, the only thing that matters is that price makes a new extreme. The oscillator does not make a new extreme, right? Even if it's equal lows, as long as there's no new extreme in the oscillator, that's considered divergence. So I do see the threat of a near-term recovery. You know, with the dollar CAD bouncing, that's CAD weakness, might be actually a decent play. I obviously highlighted this for some reason earlier in the week. I don't know if one of you guys asked in the webinar, but it's still the same level of key resistance in my humble opinion. Okay, you got the median line, you got the 1618 extension off the highs, you got a basic 236 from the ascent off the lows, and all of those converge right here. So on a breakout of the weekly opening range high, I think that's a nice initial target. I can't say I have too much conviction on this trade because largely speaking, I'm looking for dollar CAD to peak out and get some CAD strength to drive it lower. So I don't know longer term if I want to really be, you know, bearish on this trade. Bangani says, sorry, can you please explain that divergence analysis again? Sure. So when we're looking for divergence, this is a very common question. When we're looking for divergence, a lot of people will say we need price action to make a lower low and the oscillator to make a higher low. But that's not really correct. If you look at the textbook of what divergence is there needs to be an extreme in price, not the oscillator, meaning a lower low. And remember, we're only looking at the closes, right? The peaks, the wicks don't matter. So you have a lower low, and here you have a higher low. A lot of people would easily identify that as divergence. But guess what? Here you have a lower low, a new extreme in price. These 2 points don't. That's still divergence though, right? Even if this makes equal lows, there's no extreme here, but there is an extreme in price, and that's divergence. So you're always looking for price action to make a new extreme, and that extreme to not be reflected in the oscillator. Does that make sense, Bangani? Little subtleties there, but can sometimes, again, offer some tell on near-term momentum. Yes, it does, he says, right on. Okay. Good question. So Graham, on this trade right here, he says, thanks. Yeah, I mean, I wish I had more conviction on you. Obviously, the soft target, what is this 47.30? Okay, that's just a swing low that we had highlighted from back here in April of this year, right? Catching the lows, and if you take a parallel, does that actually follow? Yeah, not too bad. So yeah, if anything on this, it's a very clear weekly opening range, Graham. I would say the risk is for a possible near-term rebound and a pullback into 49.19, 49.10, but I really wouldn't get anything aggressive above that for EuroCAD in the near term. That would be my medium-term bearish invalidation level. All right, so that is EuroCAD. That's number 7 for the session. All right. Pound yen. Good old pound yen. Who's getting in on this trade? So resistance held. It couldn't make the run. Here's what we were looking at back on the 18th. The basic premise of the trade, again, was this major key breakout. This is just a near-term descending channel formation off of the highs that we made back in May. Nothing fancy. You had the 200-day or the 100-day, moving average, which was converging on there to start the week. Here's what the 240-minute looked like. It looked like you made the break of that channel resistance, and we're checking it as support. 140.90 being our near-term bullish invalidation level, meaning as long as price stays above that level, I'm actually looking for a drop to get long. So we've kind of stalled out. It rallied into 142.27. We kind of held that, and now we're pulling back a little bit. Here's pound yen on the current chart, and the concern is that you're making an outside day reversal today after trying to break that resistance. Now we're at support and bullish invalidation right now. Here's what it looks like on the intraday chart. And here's what we look like earlier in the week. Whoops. There's the 120. So you came into this region of resistance, 42.27, couldn't break. Initially, essentially now the weekly range highs. We got that one stretch to 42.50, but the breakdown, taking out the weekly opening range lows, and again, into that key pocket of support. So from here, guys, you know, this is the last ditch effort. If pound yen doesn't hold this level, you're probably going to see a much larger breakdown. I'm on the lookout for some near-term exhaustion as we head into the U.S. Open here. Again, the subtleties of divergence. Bongani, since you asked that question, just to follow through. Slightly higher high, slightly higher high, slightly lower high, right? Subtleties. Near-term support. Bring this back into a candle. And now we'll take a quick retracement just to add color here. 50, 38's already being tested, and we're right there right now in that pocket support. So I won't even leave that on. And again, the 50 is going to be pointless. So kind of got your targets right there, okay? Any second now. There we go. Sandy says, I'm short. Nice. Sandy, where's your target? Watch 140.90. Look, it's not only just a basic 236. I don't really care so much about that, but it's that swing high and former channel resistance. That's why this was our bullish invalidation level. So if this thing is heading higher, this is the support that would hold. If it breaks, I think you're in a nice position. I would get a little defensive here. So maybe take a little off the table, bring your stops to break even or better. If you get that downside break, I know you're targeting 140.80, which is the weekly pivot. Okay, so just below that region, not bad. Honestly, but 140.15 wouldn't be outside the realm of possibility here if you do get that break to the downside. Pound yen has 5-minute divergence, but I think I'd like to see a 3-point trigger. And it's just before the U.S. Open. Graham, really nice. I like where your head's at. It's exactly the kind of stuff I look for. Let's take a look. So yes, you are getting some divergence. One thing I always note to everyone here in the room, divergent points that are below 30 and above 70 will always be your weakest, signal. So Graham, the reference points, actually, if you go back in price action, historically, the reference points, the closer those reference points are to 50, actually tends to be the strongest RSI divergence signals, which is kind of counterintuitive, right? People always look for divergence into overbought and bullish divergence into oversold. Those don't, it's not that they won't pan out. They're not typically, I've seen over my experience trading, those aren't typically going to be the strongest signals. So something to keep in mind. Yes, there is divergence here, but it's not the strongest. That being said, you're at support. You are at support. So I do like the concept of seeing some sort of reprieve here for a near-term recovery to the upside. Yeah, and I do want to see the U.S. Open too. That being said, most importantly, it's very important to keep in mind this session at these levels. Obviously, it's way too early because we haven't even opened U.S. trade. But if it were to close at these levels, an outside day reversal off resistance or ahead of resistance is not really going to be a very bullish thing near term. And a nice rejection of 50 here in momentum even. So I'll have to see. I'm taking a little bit more of a neutral stance here. I do want to stay constructive above 140.90 if it holds. Questions on pound yen? Graham says we'll stand back for now. Yeah, I'm likely to take a stab at this. We'll see how the U.S. Open session looks like. I'm not so crazy about the yen. I think, like I said on dollar yen, I think you could see a little bit of a pullback here before you start to get back on the long side. So we'll see. We'll see. Broadly speaking, still like pound yen. All right, that is number 8. Euro yen looks like this. Did we not do euro yen? Oh, we did euro yen, right? Okay, 7, we'll make that number 8. Aussie dollar. And did I do CAD yen? Guys, I'm losing track here. Before I do Aussie dollar, let me do CAD yen. Who was that for? CAD yen. I haven't looked at that in a while. Where are you? It's not even on my list anymore. Let me see what I got for you, Graham. It's not on my watch list, so I don't know if it's an updated chart. It doesn't look like it's been updated since back here in April, but we can do that in a jiffy. Just bear with me one sec. Not bad. Just cleaning this up real quick so it's eating up my... Okay. So for CAD yen, interesting price action here. I actually, again, Graham, I haven't looked at this in a while. So just kind of keeping things as objective as I can. Here's your yearly open. Okay, so feel free to take a snapshot of this chart if you need it. We're still broadly within the confines of this slope. puts near-term key resistance just higher. I'll be looking at this region here. Come on. So right around like 84.80 into the 85 handle would be the big resistance. You can see a perfect touch here to open up the year. That's crazy. And let me take an extension here. So near-term support 83.80 into the 100-day moving average. That gives you 83.60. 20 pip range of support. Resistance up at 84.80 into the 85 handle. That's on the near-term charts. You got the 50 line there. You got the upper parallel there, and the former swing lows for the yearly opening range low. So big region of resistance coming up for CAD yen. Let's drill down into the intraday charts. Okay, that looks pretty good. I can get rid of the 38.50 on that. On the decline, you want to take a quick retracement of the decline off the highs. Trading just below the 50 at this point. Okay, let's add this slope. Ooh, it looks even cleaner on the intraday. Yeah, I mean, so it's basically the same setup on the daily chart. So it's pretty clean. I'd be looking for 83.75 near-term support. Like I said, in the upside, right under 85 is going to be the big region of resistance near-term. Again, the upper parallel there for that longer standing slope, as well as the current operative 50 line and the 50% retracement, which actually comes pretty darn in line with that level that we just eyed out at 84.80, the former opening range low for the year. 84.75 is going to be the 50 nice region of resistance for CAD yen. So hope that offers some clarity for you, Graham. It's an interesting pair. Again, I haven't actually looked at it for a while, so thanks for bringing it up. But yeah, I would say you have another stretch into the highs here possibly, but you're at risk for a near-term exhaustion trade to the downside, I still think, on the yen play before you push higher. I'm just trying to see if there's any structure to the near-term ascent here. And let me just mark up your weekly open. Right there. So that's your weekly open. So you've made just a very simple weekly opening range high. This is now also, even better, your weekly opening range low. So 83.75, 83.80. Watch for that major support. Okay, Graham? He says, thanks. I was looking for a trigger to get long. Don't see it right now. Yeah, I don't see it right now either. In fact, momentum looks like it's a little bit heavy here. You're seeing it bounce off of, is that 50? Right around 50. So look at what the U.S. trade session looks like. Your best bet at any type of long exposure is try to take it against the opening range lows for the week. It'll be a quick stop. So if you get stopped out below that on a move lower, you'll know real quick if you're wrong, and it'll just be a nice trade to the downside. But any type of long exposure, I would really try to test it against the weekly opening range lows. Okay, and then watch 84.75, 85 as the major resistance near term on the upside. But interesting pair. Interesting pair. I can't say it would be my favorite right now, Graham, just because of our relative biases both on the CAD and yen. But certainly from a trading standpoint or from a structural standpoint, 85 is pretty big resistance. Pretty big resistance. Hope that helps, sir. All right, so that is CAD yen. That will be number 8. Euro yen we got. Aussie dollar, I just want to touch base on real quick. Here's what Aussie looks like. And here's what it looked like earlier in the week. So, you know, for Aussie, I don't know what to say with this thing. Where is it? Here's what it looks like. We're basically, the daily chart is really what has me irked. We're basically holding in this key zone. I wanted to see either a blast through this or on the pullback at least find support in here. And you've kind of just been sticking to that region. The daily chart is ugly. Okay, here's what it looks like. The only thing I'm looking at is the structure, and the only thing I've continued to focus on is that median line as support. We haven't even touched that for the last couple of days. I'm still stressing 75.60 as sort of the major support here for Aussie. You have the 200-day moving average, the 100% extension, and that would certainly necessitate a break below the median line. So that being said, here's what the intraday chart looks like, guys. I'm just showing it to you for reference. Again, if you had to pull a gun or put a gun to my head, I kind of still rather, take longs off the median line. But at this point, it's just a weekly opening range. You have to play the break. And if it breaks to the downside now, it's going to break that median line as well. 75.60 would be the first area of support, major pivot in price, and beyond that, 75.35. So not really crazy about playing it right now, Kind of think it has one more washout before we start to move. Broadly speaking, I am constructive. But in this consolidation, this is where I tend to get chopped up. So I'm kind of a little bit more reserved here on the Aussie cross. So no change to any of the Aussie levels. Any questions on this pair? Aussie Kiwi more convincing, says Raphael. Let's take a look. Aussie Ki. So for Aussie Key, the major resistance, 105.40, 105.58, is still the game play. We came right into it last week. We pulled right back. As opposed to saying Aussie Kiwi is more convincing, Raphael, I would say that Aussie Kiwi is going to be the tell. You know what I mean? As opposed to being more convincing. Because for me, this was an opening range break to the upside that quickly pulled back. So I'm still treating this as still, for the month of June, this has still been in a simple monthly opening range, hasn't done much. The only thing that kind of has me wanting to be cautious of the long side is this slope. Slope resistance, the parallel was very fruitful. Break, acceleration, acceleration on both sides. Support, support, break, saw acceleration. It was instant resistance, and that's not too much higher from where we are now. So real tight range, you know what I mean? The ATR on this pair is not that big. So I kind of want to clear out this range here first to get some clarity on Aussie Key. I think this will be the tell, though. If we see the top side pop and you see a recovery, Aussie strength, Kiwi weakness, that's what I would prefer, because I do think Kiwi needs to pull back, as I said earlier. But we just don't see it materializing yet. And patience is what, Raphael, you took the words right out of my mouth. On these types of trades, patience pays, I think you get more clarity on this. So the Aussie cross is out of love right now. The only Aussie cross I got excited about, like no one's business, was Aussie yen. And I still think that's going to be my favorite Aussie cross moving forward here. So see if that resistance holds into 85, 84, 84.80. And again, the break below 84.25 to get this thing going. I'm looking at 83 for Kiwi yen, says Karthik. Can you please have a look at that possibly? Sure. Yeah, Kiwi yen is something that we highlighted here earlier. You're looking at 83. Let me ask you this, Karthik. What do you have there at 83? I have 82 as a huge region of resistance. That's the 2016 Open, 786 retracement. It's also the upper parallel heading into the end of the month here. But I do want to warn you that near term, again, you know, you're getting those divergence or that momentum starting to cap out, getting a little tired on the Kiwi long side. So, you know, I'm not a big bull on Kiwi. I do think yen weakness will materialize, but even that has a setback near term that I'm looking to play. So from these levels, I don't know if I'd get long, Raphael. I think, or this is for Karthik. Oh, you're long until that level. Okay, if you're holding along, that's a whole different ballgame. Yeah. I do like the upside for sure. Listen, the break above 79.70, 80 was huge. This was huge. Nice pivot in price, 50% retracement, cleared the 100% extension, cleared the median line. As long as you stay above that level, I think, you know, another one that has a lot of upside potential in the longer term. It's just that near term, I'm seeing signs of exhaustion here. So if you're holding longs, wouldn't be too concerned. If you're looking for new additional long entries, let me clean this up real quick. It's too soon to tell if this is a high, but I just want to see what it looks like. Yeah, I would keep 85.50 as a soft target too. Resistance, support, acceleration on both ends, resistance. Put that as a soft target on a topside break. But yeah, that's sort of what I'd be looking at. If you want to take a snapshot of this, Karthik, feel free. You got 78.90, nice entry, 78.90, real nice entry. That was the origin of the break. Well done. In fact, you front run it a little bit. I say that in past tense, which is a gutsy move. But that was the break. Real nice, Karthik. Real nice. So that's my bullish invalidation level. As long as you stay above that, that's where I would, you know, stay constructive. I wouldn't necessarily put a stop there and just leave the whole trade on. Like I said, you know, if this thing starts to break down or making a move back below the median line, it might be prudent just to take some off the table and book some, bring your stops in. But largely speaking, it's been pretty clean. Pretty clean. There's a major breakout there. Questions on Kiwi yen? He says, thank you so much. Hey, you're more than welcome, sir. Cheers on that. That is Kiwi yen number 9. Oh, that was number 10. Okay. Can we chase it? Bungai. I hope that's a rhetorical question, right? I wouldn't recommend it. Again, a pullback as close as you can to 80 for the entry. If you can take a stop that big, that's fine. But you know, I'm not at this point willing to take a 75 pip stop on a trade like this, especially with Kiwi being a little vulnerable here at the highs. I'm going to continue to say that, you know, especially for his dollar. All right. So guys, if there are no other questions, I'm going to go ahead and wrap it up here. We will be back online again tomorrow morning at 8:30 for another strategy session. Don't forget Jamie's midweek strategy webinar will also be tomorrow at 11 a.m. after our intraday webinar here. Best of luck trading. Watch out for some of the commentary from Rosengren and company later today from the United States. Could shake things up for the dollar, but broadly speaking, keep your eyes on these key levels that we've been watching. Thanks again, and I'll see you all tomorrow morning. Cheers.